investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 11th of December, just about almost mid-month. Unbelievable how time flies. The Dow at this point is down 44 at 44,201. It did try to rallied all the way to 44,376. Now it's 176 points lower than that, struggling. So let me just tell you this. So I forgot that Sherman, I need to check this out. Really, Sherman-Williams went into the Dow. Of course, they always put it into the top. So Sherman-Williams is trading down 30 cents at 371.31. This paints leg E in the monthly chart, peak E in the weekly chart. And look at this. At that peak D right there on the 27th of November, it goes to 442. I may as well just type that in while I'm thinking about it right here. 442. Well, you know what? It missed the round number high, except that the day before it had a 392 round number open. So I'm looking at this and I'm saying, God, I went through all 30 Dow stocks last night. Look, here's Travelers. Look, this is Travelers. I mean, Travelers that did fantastic. Went to peak E 3 months ago. Had a double top peak C1, C2. Remember, that's where it almost makes a D, but it just fails. And I treat that as a top, but it's called a peak C1, C2, implying no, it didn't make D, but it did a legitimate top, and it pulls back. But you know what? The day it hit its high, first of all, it did 269.56 back in October. It pulls back all the way to the 240 level, screams back up to 269.05, below that previous high. And that very same day of the high of the 30th of November, it has a 269.00 open, round number high. I couldn't believe it. I went through Procter & Gamble, I can go through them all right now. Just believe me. It was a surprise to me that it was that many. I follow around numbers all the time. Well, Salesforce is in the Dow, and Salesforce hit an all-time high. Hey, was that the same price? 369.00 all-time high right there on the 4th of December, 6 sessions ago. It's trading below that. It's trading at 357 right now. It is up 8, but isn't that interesting? Peak E in the week is leg E in the week. You have to wait for Friday's close to say if it's a peak, and leg D in the monthly. So you can see the reason why, with the mix that we have, and the favoritism going back into the tech sector, even the SMHs are up quite nicely today, up 4, the semiconductors. And that just says to me, first of all, I've been making a point about this, that if you get a really sharp sell-off as a top of significance, a top that's going to make a 12 to 15% decline, invariably you're going to see the Dow down 380 to 420, the S&P down 58 to 63, and it does that not once, but the very next day it tries to rally and it fails. This is just not that kind. This is a rotational top. And as a result, we took a short position yesterday. I should have gone 1-to-1. If A is looking weak, then short A. Don't short B as a proxy. There's no such thing. So I've got a very tight stop for subscribers on this. And I said it's an insurance policy. And I suspect it's going to be taken out. It'll be taken out. No, I don't know, but I'm just guessing that it's going to be taken out for maybe a 2% loss on a very aggressive short. You don't do better than that, because you usually get a wide stop. But I wasn't that convinced. I wanted it as insurance. But as I say, if the Dow is weak, I should have stayed with the Dow. But the IWM, well, let me do one at a time. So now we can go to the S&P. And what I've been saying, well, first of all, the Dow 9-period moving average is still not negative. I better show it to you since I'm talking about it. INDU. So I've considered that there's going to be a bounce. I said to subscribers, there should be a pretty good rally today. And I'm surprised that the Dow isn't participating, only in that it was so oversold. It'll come back. It'll probably close up in the end. But I'm looking at this and I'm saying, wow, look, the 9-period moving average right there is still very strong, way above the 14. So there's still room for the Dow in this December period to at least have a decent. I was expecting a bounce towards 45,000 to make that peak C1, C2, and then we come down. Everything comes down together. We'll see if that's the case. Okay, now I can go back to the S&P and look at this. This is it's so fascinating. Look, S&P goes underneath the 9-period moving average, holds the 14, doesn't go to even touch the 14. And it's been that way since it broke out back in early November. And look at what's happened. It's had a very nice rally. At a peak D, it's rallying 44 points to 6,074. And that weekly chart is still technically very strong. Look at the monthly chart. All right. Look at the QQQ, all-time high, may I say. QQQ trading at 528.10. This is the Index 100 trading vehicle, up 7.5. Great action, all-time high. And look how it bounced off the 9-period moving average. Walking the 9-period moving average is my expression. And the weekly chart is in leg D, and the monthly chart is in leg D. Oh, question came in about, let me just do this. Yeah, so the E-mini, I've still got this as a leg E, but it really could even be a leg, it could be a leg A in the 10-minute chart. Look at up 41. At 6,087, I've got this as a GSAS-C, 1, 2, 3, yep, an instant restart in the 5-minute chart. And look at this, you're coming right up to the 6,089 automated Chapman wave resistance level. We'll see if it holds that or breaks it. Yeah, and that's what I was saying, that I don't believe I don't see, I want you to do this, but I haven't got the chart up. I'll get the chart up maybe in the break. I wanted to show you that we've been here many times before as far as interest rates are concerned. So if you're making a big deal about the interest rates, then you've got to consider that F/B, but it's still strong. You've got to consider historically where we've been and what's going on. And as far as I'm concerned, I'll get to it. I wanted to show you. Maybe I'll do it. I can do it with I'll do it with the TBT. The TBT is the inversion of the Lehman 20-year Treasury bond ETF. So look at this. You see where we are? We've been here many times before. Especially over the last 4 years. So that's really not the issue. So it's not the issue. When I go to this chart right here, and as I showed subscribers the other day, this is my Chapman Wave Dark News Index, and I use the Dow chart. Even though the Dow has made this kind of top, it isn't because of interest rates, it's because of other things. And I said, I'm not sure whether to call this an internal high and a residual high. I'll talk about it when we get back. Meantime, this is really nice action. Dow's down 4, up 46, tenfold.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, let me just finish writing this down. A couple of questions came in, and we'll get to that. And okay, so it says here, right here, show AVGO. This is Broadcom. Let me just do that right now. AVGO. I can't remember why I did that last night. Why would I do that? It made an all-time high of 185.16 back in June, and it had 180 open on the 24th of the week of the 24th of June. What does it do? It comes right back. So that was 185, right? It comes back and it goes to 100. No, that can't be right. Whoops, that can't be right. 185, yeah. And this is 186.42. I switched the numbers around. That's why I was a little confused. So I wanted to show you patterns that repeat, and we'll see if this is going to do it. Why is it slowed down? I'm going to get there. 106. Uh-oh. Click, 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 and nothing happens. Am I looking at something different? Anyway, so this is a cup. And here's your handle. This is not one of my favorite patterns, but it's a cup and handle. And it says that there's a real good chance that we're going to test the this is a 186.42. We're going to test that level. And that'll go 1 penny above 186.43, and that will become a leg D. And this is a major, Broadcom, I mean, this is a major stock in the semiconductor. And you've got the Chapman falling axe formation. So we'll just test it and see if that's going to work. I wanted to show it for the double tops and the fact that within a sector, you've still got some stocks doing really well. Look at this monthly chart, AVGO, and it's going to peak A, peak B, and this is a leg D right now. And I just want you to see, can you see my, oh, isn't that nice? You see that pointer? I made the pointer bigger, and that's nice. I'd even like to, if I can, make it black so that you can see exactly where I'm pointing. Because sometimes on these charts, you're looking at it and people are talking and pointing, and you actually can't see where where it is. And that's what I found that was happening here when I was looking at Tiger TV. So I hope this makes a big difference. So what was the question I had before? Yes. So I haven't finished this. Let me just finish up here. So I wanted to go to the Bitcoin. So Bitcoin is trading up 4,000 at 100,970. You know what? I could be completely wrong about this. I think that Bitcoin and the market itself are going to kind of top together. They've almost bottomed together quite often over the last 6 months. Now, it doesn't have to be exactly. You remember, tops are made in rotational form. Bottoms are made because hysteria comes in. Bottoms are made almost like all the indexes within the exact same day or a day or two apart. Remember March the 6th of 2000, major bottom. We were fortunate we caught that exactly on that day. But that was Friday. On the Monday, the S&P made it slow. 6666. Okay, so now what we're looking at is, so there are enough positives within this market to say it doesn't have the character of some kind of a major top. Now it has, I've been talking about this and saying I'm anticipating a rolling correction, and if it's sector-wise, that's going to be really important. So we looked at the S&P, we looked at IWM, the Russell 2000, which is now behaving weakly, and it had been leading momentarily, and then it would be weak, then momentarily weak. So the Dow, I spoke about all the round numbers. Now look at this. If you go to gold, look at the difference. Gold is up $33 now at $27.51. One of the reasons why we hung on to our gold position, this is in the physical gold, is because I gave it a stop, and I just said, take the stop out. I don't want you anymore. But if it holds, because it was going sideways, I gave you the parameters. I said, if it can pop over, it was in the 2265 area, 2650 area. I said, if it can get to 2672 or above, that's going to say, maybe you're going to make the cup formation to test the left side high. If you break down, I don't want to see it below 2640 because 2630, that's not good at all. Have a look at this. Look at silver. Silver is in leg C. So look at that, leg C. Now, it's so interesting because some of the gold and silver stocks themselves, only a handful, not even a handful, just a few are really participating. I'm considering that this is more going to the, there you are now, the next high that we would be looking for is this high right here in silver. This is a continuous contract of 33.47. Today's high is 33.11 so far. So that's really good. And look at that weekly chart and look at the monthly chart. Let me show you this in comparison to gold. They are actually very different. This monthly chart with gold has only had one red Chapman wave Roman candle decline, and now we're back into the inside of this the red part of the candle. So I'm kind of fascinated by this whole thing in the sense that if you look at the GLD, look at this, GLD. No, I want the GDX. The GDX, which is the gold miners ETF, has started a leg D, and it's still way down here. If you're looking at it in terms of the weekly chart of the GDX and the monthly chart, it's not quite as strong. And that's what I'm saying, that it was, I felt it very significant that for the first time in a long time, I wanted subscribers to be in something that is correlated directly to gold, because if not, then you're subject to the whims and fancies of individual stocks within the sector, and you could see gold go much higher and your stock just gets stuck. I didn't want that. So there are times where for subscribers, I like to get into an ETF or ETN or a fund or whatever it is, which is the compendium of chosen vehicles within that sector. And other times I want that stock because the stock is what's going to tell us even more. Okay, so I've got that out the way. I wanted to go to high-grade copper, leg E under the 200-period moving average, really struggling. I wanted to go to did that. Oh, that's right. This is the bonds. Bonds are pulling back sharply from the 200-period moving average resistance. Boom, it hit it exactly. Leg E. Now it's a peak E and pulling back. The 9 is still over the 14. That's a good sign. Let me do this again. So Bitcoin is up now even more, up 4,295. One of the reasons why we stayed in our position, excuse me, and right here on that day that it made a high, we've been taking, as last week when certain stocks and sectors that we have were making their highs, we wanted to take a little bit off. Wanted to keep that core position and maybe even add to it. But look at this. This is very interesting because Bitcoin looks like it wants, it's a leg D in the weekly chart. It actually looks like it wants to go more into the 105,000. Is it 100?
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, I had a question about Coin, which is Coinbase Global Inc. is in the Bitcoin area. 368.90 was the high of the last major peak, not the all-time high, which is the month that it opened, was up over 400, but 368.90, and the very next month, the first month IPO was April of 2021. And that was the high. It's never seen that. It will see that again, but it hasn't seen it for a long time. 368.90 was the next peak, lower peak, and that was in when? November of 2021. The very next month, December, it had a round number high of 323.00, and it plunged all the way down to, what did it go down to? I think it went to 30-something. Yeah, 31.83 back in December 2 years ago exactly. So 31, and now it's gone peak A, peak B, peak C, peak D. I'm calling this a leg E to the upside. I suspect that 368.90 area is possible. It's trading at 318 right now. It's up 15. It's struggling a little bit, and you can see it's got a leg D. I wouldn't be surprised if we got until Friday at 4 o'clock. That I'm not sure it's going to make that 350 or 349. 349.75 high of 349.75 high of the 4th of December, 4 sessions ago. But most important, you see it's got the Chapman Wave inside track repellent zone. Now, this is very interesting. I don't know why I'm not able to click on it. What is going on here? Can I click on that? No. Oh, yes, I can. So there's something going on. There we go. Okay. So you see what I like to do? I like to do this and say, look, it's in an up channel. It went right to inside track propellant zone. I don't want to change colors. This is usually red. This one's green. This is red, and that's green on the outside. And what it says is it's trapped in a rising channel with two mini channels that I call inside track propellant zone, inside track repellent zone. And my suspicion is this has got that Bart Simpson spiky hairstyle. And this is the one that says when it keeps coming back again, you've got to be careful, because when it makes the next top, which is usually at a D, it could even be E, F, and G. I've seen it spike up and down, finally make it. Be careful, because what it does is it comes back to almost a starting point. So that says this could come back under 280, under 278. It's at 318 right now. So if it gets into this range right here, it doesn't have to. I'm just watching, but the 9 is still strong. MACD's weak, relative strength is weak, stochastic's weak, on-balance volume's weak. The only thing that's keeping it going is the 9-period moving average, but believe me, I have faith in that. So that says it could go a little higher. I wouldn't be surprised if it makes like a peak C1, C2 top, but I think it's getting top P right now, but it hasn't made a top as I see it. It'll make a top if it suddenly closes under 298. Give me a yell, we'll look at it together. All right, but it should go to that D. I don't see any reason why it doesn't have at least an opportunity to go, and that's in the Bitcoin area. So now let's see. So that was the one question. This question was Amazon. This is a very quick peek. Okay, let me just get rid of that. Remove. And this has gone. I'm a little concerned here. I think that we're getting a lot of buying and selling today. I think a lot of people are very nervous. That's what happens when TradeStation suddenly slows down like this, because they've really updated it over the last couple of years so that it's very powerful. It doesn't usually do that unless there's an incredible amount of trading going on. That's my impression. Could be wrong. So, okay, so Amazon opened at 226 today, 0.41. and it's trading right now at 230.68, up 565. Only in leg C, it should still go higher. And so the question came in 2 days ago. I completely forgot about it. I'm sorry, Joe. XRT. So you can see in this particular pattern, you've had a spike to a high, the all-time high. The S&P Spider, S&P Retail Fund went to a failure at a peak C. I shouldn't really call it a failure because the low that started all was at 20. Right there. So that was at 26.29 back in March of 2020. So it goes to peak A, then under it goes peak A, peak C. And then what happens, it pulls back really sharply from the 105-ish area down to the 58-ish area, and now started a brand new peak A. Again, A, B, C, C1, C2 acts like a D, but it still went to the D, and it's in that leg right now. Now, if you go to the XRT, that's one thing. But if you go to the RTH, which has Amazon as 20%, the Van Eck retail ETF, huge leg E in the monthly chart, usually leg G/C in the weekly chart. All the technicals are fabulous, and the daily chart, the technicals are great. And it's gone to an F/C, and I suspect it should still go to a D. So the question was on Amazon. Amazon is extremely strong, and it's helping the Van Eck retail ETF, which is 20%, has a weighting there, whereas, I don't know if it's still 20%, I wrote this a long time ago, but it has a big weighting. You can just see it by the chart, whereas the XRT is more balanced. Balance means mediocre. So look what happens. It's got a peak C. I think it's going to go to another high. So what I wanted to show you is this. This is an F. It could even be an A. But under it, you've got a gray A, a gray B, a gray C, and it could even go to a D. What's the rule of the large rectangle formation? Is that if you come down very sharply from a pretty serious notational high D, E, or F, and then you start to make higher highs and higher lows, within that you can have a peak A, B, and even go to a C and a D in a stair-step formation. Oops, that's a B. And then test the left side high, and it goes either just under, right on, or just above. And then if it pulls back and takes out halfway of the rectangle, in other words, if it goes to a slightly higher high, but in the next 2-3 weeks, if it suddenly starts to trade underneath 83, let's get it as exact as we can, 83.50. If it closes on 83.50, be careful because it could retest the lows that were made. All right, that's fascinating. That's it. So I'm just making a little note here. So XRT, I'll put it right here. XRT sometime in December. Check for rectangle. Good. Okay. Next question came in. Where did we go? Wow, time is flying. What is this? I mean, who's holding the time there, huh? Gold, silver, there. Yes. Okay. Good. Very good point, Z. Very, very good. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, I was asked about these numbers right here. This is the Chapman Wave automated support and resistance lines. Had this done by the late Herb Bruin a long time ago, maybe 10, 11 years ago. I actually don't even look at them all that much because the waveform is most of the time so clear that it says you can get that resistance, but you're going to go right through because you need your leg D or whatever it is. But when I look at it and it has this trapped high and low, and you have a number of numbers that are typed in automatically, I respect that. And look, 687.65, 687.30. It doesn't care that it trades in 25 cents increments. This is the way it does. It does it on a penny basis. And look at all the support levels. So it's been trapped. And it made a GCSC in the weekly, the 5-minute chart and a peak E in the 10-minute chart. So all I can say is if the E-mini, this is still the December one. I'm going to change in the next day, maybe tomorrow. I'll change to the next month, the next sequence. That's March. In the meantime, if I'm looking at this, it says if there's a 5-minute bar that can close above 60.92, I'd probably like to say 60.95 to give it a little room. That says you can get a whole new, you passed your 1020 marker. 1020 is when it's sort of stalled. Look right there, you can see. And that just says now there are a lot of fund managers who are assessing everything to say, hey, we didn't dive into that suddenly big pop-up. What do we do now? So I would say at 11:20 to when Steve's show ends at about noon, that's going to be the test. If between now and noon, if there's starts to trade in the 60.95 range, then you've got perhaps a whole other thing going on for the afternoon. So all I'm saying is watch this closely. It's going to give you a lot of clues. Now, I needed to go to other questions. Yeah, so mentioning the Den SLB, this is Schlumberger. Schlumberger, oh man, I don't know why. There was a day that I lost. I had to shut down. I can't remember what it was. I had to shut down suddenly, and I couldn't get my trade station to shut everything. I had to go to the platform itself. I had to close it down. I had to shut it down without saving because there was no way I could save the latest iteration. When it comes back, I should go back to yesterday's charts, but it was like a Friday and I wanted to do my newsletter and all that. I said, oh, I'll skip it. But it meant that for some reason, when it comes back again, it goes to, I don't know where it goes, somewhere in the library. For 10, 12 years, I've been trying to figure out where it goes to. And it loses stuff I haven't looked at for a long time, even though I've notated from the day that it was issued. I've notated everything, so I have to go back. So, the whole thing is, for instance, in Snagit, if there's a sudden shutdown, it saves everything to wherever I was. I can go right back to where I was. I wish that TradeStation just kept on saving all the time instead of me clicking on, because sometimes you just forget, right? Anyway, so I had Schlumberger. It made a high, pretty significant high back in 2023, and that was September at 62.12. It's come down, trough A, trough B, trough C. Now it's trying to rally, but look at the 9-period moving, how weak it is. Look at the MACD, how weak it is. Look at the stochastic at 12% and the on-balance volume. Now look at the weekly chart making a lowercase h that goes to a lowercase m and says, if you take out this low right here of 38.66 made the week of the 13th of September, wow, you're going to be careful, because if you don't immediately close above it, which would be positive, that's really negative. But if from here you can rally and close above the 200-period moving average and the 46.16 high of the week of the 11th of October, wow, then you've got something that went from an H pattern to a cup formation, and that's really positive because you could rally all the way to the next peak on the left in the 50 area from July of this year. But if you're looking at the daily chart, look, peak A, peak B, peak C, and then it fails. So I don't see anything here. And if I look at, is it MRO? I'm just guessing now, MRO. No, what was the one that we had at some point? Oh, gosh. Yeah, I'll remember that. But in the meantime, the only thing I can think of in this area is rig. And you can see rig is making this arch formation that, look, lowercase h goes to lowercase m. It is really close to taking out this left side low of 391 back on the 29th of October. So I'm saying just be careful. I just don't see any reason right now for crude oil to rally that would help the stocks like Schlumberger in the oil sector and Transocean Limited. No, this is the way I'm looking at it right now. So I need to go to question. Oh, FXI. Look at that. Goes to peak C, which can't be an E because it went to lower lows. So far it's failing. And this is the iShares China Large Cap ETF. So that just says be careful, because the 200-period moving average in the weekly chart of 30.53, you're at 31.30 right now, is like a magnet. And I suspect now it's going to just hug that magnet. It's going to go below, above, below, and keep coming back to that 31.50 area. So just be careful there. One other question I had was, Tesla. Tesla is trading right now. I have no clue. Up 10 at 411.64. A recovery high. Whoa. No. It's not a recovery high. It is called, in the parlance of the vernacular stock market notations, leg C above the all-time high of November of 2021, 3 years later. Just over 3 years later, it goes to an all-time high from the 414.50 high of 2021 to today's high in leg C in the monthly chart of 400 and, am I making a mistake? Yes, I am. It's 412.67. Hasn't taken it out yet. And you see all these notations. I wanted to keep it because Tesla split. And look what happened. It was once, this is the notation that I had a 389.51 before. I don't even remember what the split was. Right. Oh, I can tell you right now what it is, because that was 389. And the high there is 25.80. It doesn't even make sense. 10, whatever it was. It was like a 10-to-1 or something split. Amazing. Gosh, Tesla. And you think of guys like, what's his name from Boston? I just lost it. Barron. Marty Barron, is it Marty? Barron has had this thing right from the beginning, and he was adding. When everyone said, it's going down to $80. This is down at 106. Way back in January, I think 2023. And look at that, 412. Almost at an all-time high. That was my point. I'll be back for the final segment. We'll see how the market closes today. It's going to be very important. Be back in a minute.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, I was mentioning in the 1 minute chart, remember now you've got 3 of those automated resistance levels, and you've got 3 at the bottom here at the 6082.85. Let's see if that holds. But in the meantime, I've got this G/C in the 5 minute chart, which is suggesting got to watch it really closely, and a peak E in the 10 minute chart. I'll just give you parameters to look for at 3:15 this afternoon. If at 3:15, for whatever reason, I don't care what happens, I just want to tell you that if the Dow is up over 60 points, that's a really good sign, and that means that the S&P is probably they're rotating like we've looked at in silver and gold and all these different aspects where one moves and the other one follows. So if the S&P isn't running as well as sharply, it says this is exactly what we're looking at, just trying to fill the upside levels that were resistance, they were supports, and they become resistance levels. If the Dow is down 60 or more points, that's really not good, and it's probably going to drag the S&P down. And all I'm saying is that this is a period that we discussed for a couple of weeks now, saying I'm anticipating as we get into the December phase that we're going to see a rotation where the best of the best keep holding well, and the weakest ones start to falter. So I'm watching the IWM. It's trading at 237.10. That's the Russell 2000 small caps. If it starts to go under, if it goes to minus 50 cents, it says, yep, this is that phase where the rallies can't be held in the weakest areas. So just be careful here and very selective. We selective. We still, and the question came in from a subscriber, are we going to be adding? I'm not adding right now. I did have one position that I wanted to put on this morning. I actually typed it in and I said, I can't do it right now. And that was Wayfair. Wayfair, I was waiting for the leg D, which it did. And I said, it's just got 57.75 as the resistance from September. I don't know if I want to just play 2-3 points, and then it has to break out and makes a beautiful W formation and then a cup formation. Is it ready for a big move? I just don't know. It should have done a bigger move up.